Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
All right, everyone. Welcome to the Smart Property Investment Show. Been some interesting conversations lately around property investment, and if you tune in all the time, I'm conscious of things getting a bit repetitive, and it's a challenge for me, I guess, to always keep things pretty fresh. There's some certain fundamentals of property that we need to keep going over time and time again, and that's just because it's the right way to invest in property. And I'm happy to share the way I see the world in terms of property and share what I'm doing with my portfolio. And these are the basic fundamentals of property. So there's a little bit of repetition there because I think you need to get these drilled into you if you want to be successful. We've shifted quite a lot over the last couple of months around the type of guests we've had in the studios. We've had a lot of demographers and economists and, just trying to help us make sense of this current market. I don't want to go into that today. I think it's going to be done over death, and I've done too much of it recently. So if you're unsure or you need some guidance or a little bit of certainty, or you want to make yourself scared or reassured even, go and listen to some of the old episodes over the last month or so. There's plenty of different people there giving their perceptions. But I would summarise to say that pretty much to the letter, every single person still has a level of confidence around investing in property. It comes back to the fundamentals. Yes, it is a market in flux right now, but markets in flux often and usually present opportunities for investors who have got their stuff in order. So I'd summarise the last couple of episodes as that. But today, we've touched on this a little bit beforehand. The A team. So the A team, you might have heard us discuss beforehand. This is really the group of people that you surround yourself with as a property investor to make the right decisions, the best informed decisions you can to be successful in property investment. Typically, we talk about accountants. Typically, we talk about mortgage brokers, buyers agents, those sort of core team of people who can help shape the way you see investing and give you the resources and capacity to do so. What we are a little bit light on, and I am conscious of this, is financial advisors. So this is another group of people who sit within the whole spectrum or ecosystem of financial advice. They play a very important role in the delivery of financial advice for all Australians. But we haven't had many on the show before, so I thought I'd rectify that. And I've asked a couple in the studio to come have a chat with us. Jessica and Glen, they're from a business called Fox and Hare, and Hare being Glen's last name. So I think that's quite a nice monkey to sort of name a business. Guys, how you going?
Good. How are you?
Really well, thank you.
So you guys are financial advisors.
Mm-hmm.
What's a financial advisor do? I'm going to give that one to you straight off the bat.
Sure. So a financial advisor is just what you said. It's someone that helps you get your financial house in order and then understand what decisions do you need to make to move you forward to wherever it is that you want to go. So looking at all of the different facets. So things like cash flow and budgeting, which some people don't really enjoy very much, but that really is the backbone. Looking at investing and what is appropriate for you, looking at things like superannuation, which again, for many people, they haven't taken the time to do that, and things like insurances, estate planning. So really we sit at the heart of the entire financial spectrum, and we work a lot with those other professionals that you just mentioned.
So the market for financial advice is a bit topsy-turvy at the moment. We've gone through a Royal Commission. We chat about that a fair bit on the show. We haven't really touched it recently. I think we're just waiting to see how it all going to play out. But you're starting to see some things happening right now. Some organisations divesting their advice arms on the basis that some of the criticisms with the Royal Commission is that a product manufacturer, i.e. a big financial institution, shouldn't really be in the business of telling people what to buy. So there's a big conflict there. Mm-hmm. A lot of financial advisors, to use some industry terminology, would be aligned, as in they work within the umbrella of one of these large financial institutions who make products and sell products. Mm-hmm. So a big criticism for financial advice has been, who are they representing? Are they operating in the best interest of the person that needs the advice, or in the best interest of the institution? You guys is what's called an independent financial advisor, which means that you don't have no master, essentially. Can you just explain that to our listeners?
Yeah, of course. So we're non-aligned, and exactly to your point, we are not aligned to a major institution, and you're 100% right around, this perceived conflict of advice. We did a focus group actually before we launched our business, and we target a much younger demographic. So we work with clients predominantly 25 to 45. And what we heard very loud and clear from that focus group was quite a mistrust and a level of skepticism that when you go and see someone who ultimately there is some ownership by a big institution, that how will that play out in terms of the advice that I receive, and will there be some sort of conflict with what you're recommending as a product because of who you're owned by? So when you're non-aligned, basically it means that those people are able to provide advice that is based on you and not based on an underlying ownership structure.
So what's your guys' backgrounds, Glenn? How did you end up being an independent financial advisor? You must have a finance background, I would imagine.
Yeah, so I have an accounting background, but so I was at Macbank for just over 10 years in various roles, but that's actually where Jess and I met. We were both business development managers there in their wealth business, and all our clients were financial advisors. And as Jess kind of already alluded to, typically what we saw was, I suppose, older gentlemen servicing other older gentlemen, typically pre and post retirees. So again, we saw that opportunity to work with that younger demographic that we felt were underserviced.
If you're going to sort of give some criticism to the wealth advice sector in Australia today, some hard truths, how do you read it? What's your view of it all?
I think the biggest standout for me is that the advice industry is only servicing a very, very small subset of society. There's a severe lack of diversity within the advice community, and therefore there's a severe lack of diversity in terms of those that are seeking advice.
And do you think there is a movement in place to try and alter that, change that, or is this still ground zero now coming out of the Royal Commission? Do you think everything's going to change and you know, the way in which Australians get advice are going to evolve rapidly in the future? Just here you're smiling. I imagine that's the way you see the world, and I reckon you'll say, yes, that's the case, and that's what Fox and Hare is trying to do. But what's going on?
I think we are at a cross point, and that we are, as a profession, going to need to move fairly dramatically. And yes, there has been some movement, and I'm really excited to see that there's a whole group of young financial advisors coming through who wholeheartedly believe that, you know, their client's best interest is what they get out of bed every single day to do. I think we've come out of a very different environment. I think how people have ran businesses in terms of the size, in terms of how many clients they've had, how they've charged, and the underlying strategy will change. And I'm really excited by that, because I think given the Royal Commission, we've got a huge opportunity to put a line in the sand and say, right, let's do things differently moving forward.
Glenn, I've had over the years, I've struggled to get financial advisors on to the show, and some of it's maybe some prejudice from us in that, you know, to have someone from a large vertically aligned financial institution to come on the show and tell people what's going on. I always sort of felt, oh, you know what, there is this underlying layer of the quality of advice that people receive and whether or not the advice is best geared towards them. And there's a sentiment within people who would, in inverted commas, say they're property people, that financial advisors only sell, and again, inverted commas, sell managed funds, or put you in bonds, or they'll put you in some scheme to buy some trees for some tax-effective opportunity. So typically financial advisors aren't known to be recommenders or pro-property. And a lot of that, some would say, the cynics would say, because they don't really earn fees off that. How do you sort of wrap up and understand and appreciate when property would actually fall into someone's diversified makeup of an investment portfolio, and are you guys pro-property, I guess, is the simple question.
I suppose it's
a big question, by the way.
Yeah, there's a lot to take in there. But kind of breaking down, I guess, the statement as well as, I guess, the question, and this might be controversial to some extent.
Be controversial, please. We like that. It gives us headlines. You're on notice.
Hopefully only good ones.
Yeah, great.
But I am looking forward for the advice industry to be seen as a profession. I feel like there is a lot of work to be done, you know, in terms of the Royal Commission, a lot of work that's been kind of, you know, coming through there. Unfortunately, there have been some, you know, stories that have been, you know, that we're hearing that are quite disheartening in terms of client experiences. But I feel that if we don't talk about them, then they're not going to be resolved. In terms of the property piece, so look, in terms of the way that Fox and Hare approaches advice is we start in terms looking at what the goals of the client are. So what does the client actually want to achieve? And it varies. So it might be, a lot of people do come with that kind of mindset of, I need to buy a property. And we do a lot of, I guess, digging down in terms of why do you want to buy a property? So is it because they want to raise a family in a property that they own and not rent? That's certainly one goal. Do they want to buy an investment property? And if it is an investment property, then it's about understanding why property. Is it because they've seen their parents do really well out of property and they want to follow that route? Is it because they have a genuine interest in the property market? Or something also that we see quite regularly, is it because they want to build wealth to start to grow a passive income? So it's really about understanding the why behind it. And if property is something that they're adamant about and that is their goal, then we will do everything we can to help them achieve that.
And going back to my point where property typically isn't on the radar of financial advisors, there's a resurgence. There is a surge of independent financial advisors now coming online. There's always been a community of independent financial advisors. And if you look at what the definition of independent financial advice is, there's not many people that actually fall within that definition per asset, but there's a lot more of this coming online. So if I, as an investor, a property investor, are looking to get a more holistic view of my financial well-being and my financial strategy moving forward, go and visit an independent financial advisor. I highly recommend that. How do you know if that independent financial advisor is working in your best interest rather than somebody else? And I would use an analogy of property investment. If you go and see someone, a buyer's agent who doesn't charge you a fee, he's getting paid somewhere else. So when I use a buyer's agent, I'm very pro-advice and I pay money out of my back pocket to that person. It's called fee for advice. So within the context of financial advice, financial advisors, how do you know?
So something really positive that's been coming out off the back of the Royal Commission is that the fact that consumers are now much more educated in terms of types of questions that they should be asking. So if you look back maybe, 2 years ago, it's very unlikely that a consumer would then go to a prospective advisor and start asking questions about their licensing arrangements. It just wasn't on their radar. But when we sit down with a prospect, it often does come up. So I'd say that'd be certainly the first thing. If you are approaching an advisor, understand what their licensing arrangements are. And the second is around their fee structure. So at Fox and Hare, we have a fixed fee structure and various coaching programs. So we don't charge any percentage for funds under advice, meaning that if it's in the best interest for the client to achieve their goal, to invest in shares or a managed fund or property or manage their cash flow in such a way that they're contributing additional funds to their offset account, as an example, then that's the recommendation that we will put forward. And regardless of that recommendation, we're still remunerated the same.
So your target audience, so the people you like to work with, I think you said sort of early 20s to 45, and I'd like to say I fit within the bracket, so I can call myself young.
Give us a call.
Yeah. People that operate within that bracket, and your history, your experience is working within Macquarie Bank, very good bank, by the way, but you said it was typically old guys doing wealth for other old guys, right? And there is a market for that, and there's a lot.
And there's nothing wrong with that.
And there's a lot of wealth held up in that in Australia, and that's very good, which will trickle down, by the way, to this next generation. But so let's talk now. We get listeners from all age spectrums, from school kids through to SMSF trustees. But if we're going to chat to that bracket now between 25 and 45, say, of investors, how do you go about, if you're sitting within that world right now, and this is not financial advice by any means, just a general conversation, and you're thinking about your future, going, I'm not too sure, you've got that feeling in your stomach that something's not right, you're thinking longer term, are you going to have a good retirement, are you going to be able to maintain the same quality of life you have right now, and you don't know what to do, but you sort of know there's something inherently up, what do you do? What's the first thing you should be taking place, other than just seeing a financial advisor? What are the things you need to tick off before you even see a financial advisor?
It's a very, very good question, and I think one that we forget to ask ourselves, and we just kind of meander through our very busy lives, and we forget to work out, where are we going? What are we doing? Why are we getting out of bed every morning and going to work? What is it for? And I think, the very easy question is, what do you want to do? Where do you want to go? And then what are you doing about it? So, asking yourself, where do I want to be in 12 months' time? What do I want to have achieved? What about 5 years out? And then really having harder questions around, what does the long term look like? And if you're not having those questions, it's really hard to put a plan in place. So I would suggest for most people, the more granular you can be on where you want to go, knowing that life is full of twists and turns and you're going to pivot, but the clearer you can be for yourself on what is important to you, what do you inherently value, so you're making sure you're not spending money on crap that you don't enjoy or get value from. Really clearly understand what makes you happy, what doesn't. Does your spending, does your investing align with that? And then what am I doing about my longer term goals? I really think that is a huge gap for almost everyone.
So a financial advisor is not going to tell you that, by the way. They're going to might help you extract that information so they can go, okay, we know where your endpoint wants to be, and now you guys, financial advisors, can help you get there. But unless you can answer those questions, you're not even going to get a start, right?
Yes. A lot of people say, I just want to be wealthy. And I'm like, why? Like, really, why?
Can I stop you there? When people say, I want to be wealthy, what's people's perception of what wealth is?
It's a great question because there's no simple answer.
Yeah.
What is wealthy to you is going to be very different to what's wealthy to me or to Glen. And what is enough? What does enough look like? Like, what are you going to do with it? So do you want to be wealthy for the sake of being wealthy? Because let me tell you, there's plenty of unhappy, wealthy people in the world. But if you can get your wealth aligned to what's actually important to you and the life that you really want to live and be aspirational in what you're thinking, that will drive you to make really smart investment decisions.
The only thing I'd add to that, Phil, is, and I actually had a conversation with the AFR about that this last week, is a big challenge that we do often see is because there are so many options in terms of what our generation or the younger generation has to invest in. In some circumstances, they tend to do nothing, which is also a decision that they make, which may not be the best decision. And the biggest asset that our clients have on their side, beyond property, shares, managed funds, term deposits, whatever it is time. And the sooner they get their shit sorted, the far better off they're going to be in the long run.
This is good. So let's get something really tangible. So you're listening to this, get a pen and paper and write these questions down and answer them, because I think this is really important. So let's give our listeners 5 questions they need to ask to get the greatest value out of getting any sort of financial advice, because they're going to need it.
Sure.
Question number 1, what would it be?
Well, if I could just step back just one sec, I think you need to, if you're in a partnership, you need to have this chat with your partner. I think that's a huge
Crack a bottle of wine.
Get a coffee, get a bottle of wine, take yourself out. Maybe don't be in the house.
Yep.
So are we talking about the 5 questions before you go and see a financial advisor, or kind of the bigger picture questions as well?
I want the 5 questions before you see a financial advisor or any type of advisor, whether it's accountant or whatever, because they're going to ask you these questions, right? So it's good to actually have this conversation beforehand.
Totally. So some of the things that we ask our clients to think about before they come into a goals and value session with us is what's important to you. Everyone is so different. And if you're part of a couple, you will have different drivers and different motivators. And actually they may conflict with each other, which might cause a lot of financial frustration in your relationship.
And it's best to have that conversation before you sit in front of a financial advisor and have an argument about it.
Yeah, we see that sometimes when people haven't.
Bet you do.
Yeah, haven't had a chat. So understand what's really important to you both or to you individually. And then what do you want to do? What are your goals? I would really spend a lot of time breaking down all of the different things that you want to do. And actually all the research says that the more specific you can be, the better. And our brains are actually wired to want to achieve goals, not like freedom or wealth or, airy-fairy kind of goals, really specific goals. And your brain is designed to give you a nice little hit of dopamine every time you can see you're advancing to that goal, which obviously motivates you. But if you don't have goals as an individual or as a couple.
So this might be, we want to have a child, or I want to create my own business doing something or other, or I want to sail across the Atlantic on a boat. Like, that could be big goals and potentially unrealistic goals, but a goal is a goal is a goal.
Yeah. So we have clients who want to start businesses, who want to pivot their careers, who want to buy property, who want to invest for passive income. But, when you're looking at investing for passive income, what amount do you need? What are you going to do with it? We have one client who has a property portfolio, and we're working really closely with them so that in a few years they can go and spend some time in France and know that their mortgages will be covered while they're gone.
Glen?
Yeah, it's really important that also those that do seek advice understand what I suppose when we reference goals, what instant gratification will have on those longer term goals. Because, the decisions that they're going to make today will have an impact on the goals that they said were important to them that they want to achieve in 5-10 years' time. But coming back to your question, before seeing an advisor, I would certainly look at reviews and testimonials. I think that's a big one. So look at their website, Google, Facebook, and really look at who they're servicing and see if those people look and feel like you, because advice is exceptionally impersonal, and the conversations that we have with our clients are sometimes conversations that they have with nobody else, because money is still something that's quite bit taboo. So make sure that they look and feel like they're the type of people that you would want to work with.
Yeah, and to this question around the questions you need to be asking yourself before you see a financial advisor, but it might just be you could ask yourself these questions every month just to see if you're aligned. I would add, you want to know, you want to have a think about what your retirement would look like, which is very specific. So when you choose, or if you choose, or you have the option to choose not to work anymore, what does it look like for you? And a lot of that might be goals based, but that's probably a pretty important point.
Definitely. And then I would ask myself, where does my money go? If I get paid fortnightly or monthly, where's it going? How much am I saving? Am I spending on stuff that actually doesn't really add any value? And if it doesn't, and property is really important to me, well, every time I'm spending money on stuff that I don't value, I'm losing my chance of doing something that I really care about, because what we forget, we confuse urgent with important.
Yeah. And now more than ever, it's imperative that people are making the money that they do earn work harder for them, because I think real wage growth over 2018 was less than 0.5%. So if your salary isn't going up on a regular basis, that salary that you do earn, the surplus cash on a monthly basis, if it's just sitting in a bank account, it's certainly not going to be working as hard as it possibly could be.
And I guess the fifth point for this and for you guys to discuss, should you actually explore your appetite to risk as part of this journey as well? Is that something that's pretty important?
Yeah, definitely. Yeah. And within the risk appetite framework, so how much risk do you want to take on? And actually, speaking as a female, my experience has been with female clients, they tend to not want to take as much risk. Sometimes with younger gentlemen, we have to coach them to take less risk, and I have to coach some ladies to take more risk. It should be goals-based risk. So the risk, if you want to buy an investment property in 12 months, you need to have a very different risk appetite for that goal to your long-term retirement goal, which might be 30 years away. So, appetite to risk, definitely in a broader sense, but then think about individually for the goals that you've decided are important, what's the time horizon on them? And generally, the shorter the time horizon, the less risk you want to take.
And this might need to be a bit of a step change to people that invest in property. If you're visiting a financial advisor or an accountant or someone that gives you financial advice, as part of these sort of 5 things here, we haven't specifically spoken about products, so the type of asset class. So what we're talking about is the end result. The end result is what you want. These are realising your goals. How you get there will be different for every single person, and property might make up a part of that. Portfolio might make up a lot of it, might make up none of it. So it's not really, I go to a financial advisor and say, I want to invest in property, tell me how to go about doing that. It's more about, this is my end state. Can you guys help me get there? And then it's your job really to actually say, well, what's your level of risk? All these different questions to say, well, these are the sort of asset classes that you should be investing in. So if you go down that journey and you want to invest in property, inverted commas, and you get told, no, property's not right for you, that's okay. Does that happen a lot?
I don't think that happens a lot. I mean, we're massive advocates, as I think everyone should be, of diversification.
Yeah.
So we would, and in terms of our approach to advice, we build the strategy with the client. So our role is to show them as many options as possible to enable them to achieve the goals that they say are important, which will include or potentially include property, shares, managed funds, term deposits, whatever the case may be. And then we work with the client to determine, based on their risk profile and the pros and cons of each strategy, which one sits best with them.
It's been pretty heavy. I'm going to go a bit light for a second. What's the stupidest investment you've ever seen one of your clients make before they come to you?
Cows.
Cows?
Stupidest
cows.
investment.
So where you just shook your head and just go, what were you doing?
Yeah, I remember the cows one.
Like cows just sitting somewhere, or I imagine cows on a farm that create milk if you're a dairy farmer are a good asset, but
Yeah, this was not a very well thought through.
Okay.
I think they went to some sort of event where there was free wine. Be careful of free wine and free advice.
so it happens there as well, because it happens in property, right? Yeah. Come and get educated, and you could guess what, you can buy an off-plan property out the back.
Yeah.
You know, it's
Do you know that the stupidest decisions I have seen clients make is actually taking out personal loans, maxing credit cards to buy property, and just not really thinking about once you've got they're so fixated on this goal of property. I've seen this done a few times, and then when they've got the property, they think, holy dooly, I've now got this huge amount of money that's on a 20% interest rate. Now what?
debt on debt.
Debt on debt. And we've seen a few of those clients who come to us saying, you need to help me get out of this. So that's probably, apart from the cows, that's probably one of the biggest mistakes. And you just, I totally understand that property is so ingrained in our psyche and we love it being Australians, but I would never advocate maxing credit cards or getting personal loans to get a deposit.
The best time to invest in property is when you can afford to invest in property.
Yes.
That's not being able to afford to invest in property.
Yes.
Yeah. That's crazy. So when you talk about diversified portfolio, stocks, equities, property, managed funds, etc., when do you need to start looking at even more left of field stuff? Is that really only for people with a squid load of money, like wine and fine art and classic cars and that sort of stuff? That sort of shouldn't be on the radar of most Australians, right? Because as an asset class, it's probably either a little bit too much of a bridge too far, or it's probably not right for them. Is that a good assumption, or is that when would you recommend? I think some art would be great for
Look, I haven't today, but because I probably don't know much about art.
Yeah.
But I think it sounds like if the wine and the art and all that kind of stuff, that they're emotionally driven investments. And whenever you're looking at any investment, when emotions come into it, I really would question the validity of that investment.
And people did all of that sort of stuff when they had self-managed super funds where they could hang the yacht in the house and drive the nice vintage car. The world's changed a little bit since then as well.
Yes, it has. I think we've done pretty well there.
Cool.
So, final question. You guys, how do you feel about the environment right now? Is it just this market we're in, market cycles? Share market has taken a couple of hits over the last couple of months. I think it's down below where it was sort of earlier this year, and you've had some major sort of marquee stocks sort of losing some significant value. Or there's talk around property. Sydney and Melbourne. There is other parts of Australia where property is still is going north rather than south. Queensland, Tasmania, etc. There's all this different stuff going on, all this noise. No one really knows what's going on. Is everything okay? Is the question. Is everything okay?
Yeah, good question. In my view, yes. So, I mean, obviously, we're bombarded with, stories of, the property softening and the share market volatility and things like that. But I think reading one of your early articles, one of the best time to start investing is now, because if you're looking at a good asset, then over the longer term period, it should outperform based on history. The biggest challenge that, again, a lot of people reach out to us for is because there is so much uncertainty, then they're not sure what the best thing to do is. And then coming back to my point earlier, they end up doing nothing. And taking the time horizon that some of these people have, it's important that they take that into consideration as well.
Yeah, I think there's so much groupthink with investing, and we get really sucked into all of the hype. And so what happens is people buy when things are high, and then they freak out when things go low, and that's when they sell. And it's the completely wrong thing to do. Yeah. And again, it does come back to Glen's point around time horizons. Like if you've put yourself in a situation where you need that money quickly and you've put it in a riskier investment, I mean, first and foremost, you shouldn't really get to that point. But if you're looking at the longer term spectrum, when markets are down, that presents opportunity. And I think it's time, I have seen a resurgence in younger people living in Sydney who are excited because for the first time in a long time, property is potentially on the horizon for them. So, it can be scary, and you can watch markets all day long go up and down and really buy into that emotionally. But actually, if you know where you're going and you know what your time horizon is, make smart investment decisions and then stay to them, stick to the plan.
Discipline is massive.
It's usually where you guys putting your money at the moment, or what, like quick view of your sort of portfolios. What's your wealth creation strategy personally?
Sure. So real property, definitely, as well as index. So a big fan of the index philosophy with dollar cost averaging, which basically means regular same contributions over a longer period of time.
And we are massive cash flow nerds.
Okay.
Yeah.
We love cash flow.
Cash is king.
We're pretty strict on us. We practice what we preach.
Yeah.
When it terms of how we structure our cash flow and making sure that we're not spending money on stuff that's not important.
Yeah, that's a really, really good point. So Jess is off to Germany, I'm off to Scandinavia over Christmas, because that's where we want to spend our money, but we both shop at Aldi.
Yeah.
Love Aldi.
Aldi's cool. I'm a big fan of Aldi. Anyway, that's all changing as well. Cool. Thanks, guys.
Thanks so much for
you.
having us.
Really enjoy the chat. Yeah, you should, if you're tuning in and, hopefully you're thinking around financial advice, and I'm a huge advocate of financial advice, the right financial advice. You've got to be comfortable with it. But if it's not yet part of your mix and you're trying to do everything yourself, from doing your own tax return or finding your own properties, or even trying to get a greater understanding of how you can create wealth through property with a financial advisor, I start knocking on some doors. And good financial advisors. How did you guys? If someone wants to see you guys first off, do you charge them, or you just sort of So typically you can go and see someone and you can see whether or not you get on and they're the right culture with you, and to your point originally.
And you should see a few.
And you should see a few.
Definitely.
So
make
shop around a
sure
bit.
that the person that you meet with, you have a personal connection with, and you genuinely feel that they're going to act in your best interest. And most advisors will catch up with you for a coffee, and you can kind of do the...
You work it out pretty quick. It's
You
just
work
like
it
a
out pretty
speed
quick,
date,
but it's
right?
gonna work.
Okay, cool. All right. Well, I hope you enjoyed that today. That was really good. Jess and Glen, thanks for your time. Really good.
Thanks,
appreciate your insights. And yeah, we're mixing it up. So if you want to come on the show, reach out to the team. We are trying to get greater diversity in the type of guests we have, so we can share this story and keep building this community. If you email editor@smartpropertyinvestment.com.au, we'll get all that hooked up. That'll be really cool. If you like what we're doing on the podcast, just press that subscribe button wherever you're listening to it, so you can make sure that you get every new episode as it comes down line. If you're huge on social media and that's how you want to get your information, just track us down on Smart Property HQ. Again, just go to smartpropertyinvestment.com.au. Literally thousands of pieces of information, articles there around property investment and even diversification outside of property into other asset classes, as we spoke a little bit about today. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.